I'm Dan Fitzpatrick at RealMoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Now it's Monday, so we're going to look at the 3 top searched stocks on TheStreet.com last week, and that's gold, no surprise there. Apple, no surprise there. And Verizon, no surprise there either. Now we're looking at gold. For the last week or so, a couple weeks really, a lot of the pros have been saying this is ripe for a pullback. Gold is overdone. It's going to go straight down to zero. Well, not so much, but here's the deal. As far as a long-term uptrend goes, I don't really see any reason why this shouldn't persist. Again, long-term we're talking. This thing I like about this chart is this. It's really easy to draw a straight line and say, well, when it stops doing that, then I guess I'll stop being long. Now, how do you trade this thing? We look at the daily chart and you can see just relative to the 50-day moving average, it's certainly extended. And we're getting a little bit of a pullback. You get this, look at the box here. Very, very high, far extension above the 50-day moving average. Back here, didn't even need to move so far. Same thing here. So this is on a short-term basis overbought. You can see the RSI indicator. The cool thing about RSI is, guess what? It doesn't work. We don't care about the RSI indicator in a stock like this. You know it's overbought. It's going to stay overbought because that's what RSI does. That's what these overbought, oversold indicators show you. Only time you really care about them is when the stock is in a trading range. This is not that. So what do we do here on gold? Look, if you're a shorter term trader, or you just want to take some profits in general, because if you're a longer term trader, then you have profits because this gold's up at almost an all-time high. So instead, look for more of a pullback. I'd say to here 160, something like that. Even I could see that. Maybe we even get into the 150s if this thing pulls back hard. I don't really see that happening, but I would use any pullback as an opportunity to buy. Enough said. Now, Apple, this stock has been in a very well-defined trend. If you look at the weekly chart, you can see these periods of sideways consolidation here. Here, we even got one back here. We got one here. And then each time the stock moves out the upside, moves up to the next box, moves up to the next box. I anticipate this moving up to the next box again because that's what Apple does. Come out of this volatility squeeze, it's got a pullback, and so far that pullback is buyable. We look at the daily chart and you can see what I'm talking about. Look at the 200-day moving average. It defines support on this stock. Stock pulled back to the 50-day moving average, which is also moving higher as well. This is a stock that you want to get long. With that said, it's had a really nice week after a big sell-off, a big nasty move on Monday. This stock could use a little bit of a rest. If it pulls back, any little pullback is a gift. Go ahead and take that opportunity to buy some Apple. Now, Verizon, they got a bunch of strike and union workers here, and that's not a good thing for the stock. So what do we got here? First of all, we got a 5.6% yield. That's pretty good. That yield only gets higher as the stock falls lower. Here, I wouldn't really call this a volatility squeeze up here, but let's just say the stock's been channeling for a bit. It's fallen out the bottom of the channel, but I view this right here as some pretty solid support. That's 32.28. If you're long this stock, then you're risking, about $2, a little over $2, because you'd want to keep your stop below 32.28. I'd say 32.10 or something like that. You can keep ratcheting it down and say, well, then maybe just 32. Well, then if 32, maybe it'd be best to do 31.90, and before you know it, you've given up another buck in terms of risk. So don't do that. Just keep the stop a little below 32.28, and I think you're good to go. Okay, that's it for today. Look, you need to get over to realmoney.com and subscribe. Every week I publish a few articles. They're called Fitbits with at least 5 charts in each article. That's a lot of trades for you, baby, and it's all for one low price where you get me, you get Kramer, you got Dougie Cash, you got RevShark, Helene Meisler, all the biggies, okay? So you need to get over there and do that. You're going to make some real money. Also, want you to get over to stockmarketmentor.com. That's my website. You can sign up for my free chart of the day. Just get on the email list. Once a night, I'll send you out a chart video. It's usually 4 or 5 minutes long with a lesson and a trade in there. I'm Dan Fitzpatrick, and I'll see you right back here tomorrow.